Hello and welcome. You're watching Buy Now, Sell Now, where we specifically give answer to your stock-specific question. But we are also in the thick-of earnings season, where we are joined by different managements and we discuss their quarterly results and also give you a take on what's going to happen in the further quarter. But then look at the market. This is the last the trading day of the week, but there's softness in the market, as we can see. There is sectoral performance is also mixed. We can look at mid-cap and small caps. In fact, doing flat right now. There was a momentum. In fact, mid-cap 100 is almost 1% up. Small cap right now is pretty flat, but auto and IT, two sectors which are up almost more than 1%. We are looking at financial services, pharma doing flat in today's trade so far. Reality has also gotten straight, but look at media, energy. In fact, if we look at a defense pack, that is also losing momentum now, almost 1% gains. Manufacturing sector almost doing good in today's trade, but there's a weakness reflecting in the market, specifically in financial stocks, despite broader market resilience that we can see. But let's start talking about the quarter earnings and TCI Express, our first management that we are going to talk to. And the revenues in terms of the numbers have seen a slight miss, but robust growth in e-commerce segment though. But then let's talk more on this. We are joined by Mr. Chandra Agrawal, MD, TCI Express. Good morning, sir. Hi. Welcome to the show. Revenue that we've seen growing almost at 8.7% versus that was given of almost 15%. What specifically disappointed here on the revenue front, and is the full year 13 to 15% guidance still intact?
Let me start by saying that the full year guidance of the 12 to 13% is still intact. No change in that. The fall in, even though we have like a 9% growth in the Q1, and our sectors, our businesses like the e-commerce growing above 60%, and even the air cargo business growing at 30%, and in Q1, and even the international business growing at about 25%. In spite of all the geopolitical situation, I think a little miss in the guidance given of 15% is something which we will cover up most likely by the year end. Again, we are right on track in achieving what we have guided from the beginning of the year.
All right, Mr. Agarwal, now fuels charge passed to 90% plus to customers in June. Now, quantify the expected EBITDA margin benefit in Q2 in basis points, please.
So already our EBITDA from last year is up by 12%, and going forward, I think with the fuel surcharge and everything that we're charging, there should be another maybe 200 bits or basis points of further expansion in the EBITDA growth in the next quarter.
Okay, let's talk about the e-commerce segment, grown almost 63%, but is still almost 2.5% of your revenue. What's the quarterly revenue run rate needed to reach your 5% mix target, and by when can you see this happening?
So the interesting thing in our e-commerce business is that compared to other companies, it's very profitable for us, and we like to take it slow and steady and not be on a run for high top line numbers, because that'll automatically affect will give us lower bottom line numbers. And looking at that trend, the 5% of the revenue mix is something that we are not aiming to have it like in a very short period of time. We want it to be at least in the next 2 years. We expect this to be at least a billion rupee business for us. So with that, with a billion rupee business, we expect at least almost 15 million rupees, or sorry, 150 million rupees as profitability as well. So this is something that we are doing, and we're right on track.
Mr. Agarwal, branch network has crossed about 1,000. So are you looking at further network expansion? Is that something that you're looking at as the key growth lever, or does automation-led productivity improvement take over from FY28?
So it's a mixed bag. You have to have automation and the branch expansion. 1,000 branches would mean that now we are able to deliver to 60,000 locations and pick up from about 50,000 locations, which is one of the largest network that we can have in Asia and India as well. Now, with that, we are able to deliver also to 200 countries. So network, I think expansion is something which will add to the top line, and of course to the bottom line as our pricing increases for those locations. We will see that adding in as well.
All right. Kolkata and Ahmedabad hubs to be automated by FY28. Now, what's the expected throughout improvement and cost per kg savings from each automated hubs?
Kolkata being one of the largest sorting centers that any company will have in India, and I think the saving as such, I'm not able to quantify at the moment, but overall, the important thing is that with automation, the throughput time reduces, and that is more critical. And with that, when we have a network of our automated sorting centers, say we have in the top 5 locations or the top 7 locations, then we will see the real impact of the cost savings coming in. And then that's not too far away. I think in the next 2 years, we will have all the major centers fully automated. And that will at least help in about 100 to 150 basis points in direct cost savings.
Now you're evaluating land in Mumbai, Chennai, and Bangalore. So which city is it that is closest to closure, and what's the strategic rationale for you prioritizing it?
So Chennai, again, is something which is actually Mumbai is much closer to our finalization of the new mega sorting center that we're going to be building. The rationale is very simple. Wherever the business is being generated the most, we will put focus over there. And Chennai is coming up quick, but not as fast as the Western India. So our focus, as mentioned, was Ahmedabad, and then we're doing Mumbai, and eventually in the east we will have the Calcutta sorting center, and south will be the biggest in Chennai.
Let's focus on SME now. B2B mix returned to almost 50-50. Is SME demand now recovering, or was Q1 a non-quarter bounce?
Actually, Q1 we saw a very good bounce back of the SMEs, and that really helped in also our top line. Something which is I think the whole year is going to be quite progressive and quite with good growth. Interestingly, even with all that is happening with the geopolitical and the costs rising, the demand itself is quite robust for us to see the high volumes and the high profitability.
All right, Mr. Agarwal, appreciate your speaking to us on NDTV. Thank you
Thank you.
On ET Now. Thank you very much for joining us. And we slip into a very short break here on Buy Now, Sell Now. Do stay with us.
Welcome back, and it's time to answer your stock-specific question. But before we get into that, let's just quickly flash our QR code, which you can scan and send across your stock-specific questions. Write on the name of the stock, the price at which you bought it, and the timeline till when you have to hold that stock, because we have a fundamental as well as a technical expert who will guide you on your stock investments. And you can connect with us live, and this is the QR code that's flashing on the screen. Scan this, and you will be connected to a WhatsApp number. All right, as guest, joining us is Kunal Bothra in the studio and Mr. G. Chokhalingam. Hi, good morning, and welcome both of you on the show. Let's just start with a WhatsApp question. This is coming in from Mr. Bharatwaj from Coimbatore. Vikram Solar is the stock, and Chokhalingam sir, I'll come to you because he wants to hold it for next 3 to 4 years. His buy price is almost 303. 290 is his quantity, and he is in losses. I think the buy price is very high, but he wants to give some more time. What would you recommend?
I mean, if somebody is holding, one can continue to hold. Otherwise, as I've been saying, I am quite nervous or pessimistic about small and mid-sized solar companies, because a lot of industrial houses also have jumped in with a huge capacity build-up, and certain segment of solar business there is already over capacity also. So therefore, I would advise caution on solar theme. But if somebody is trapped, one can hold. To be fair to the stock, it's a really good company. Its only problem is, the industry issues.
Right. Let's go across to the next question that we have. Now, this is a very broad-based sort of a question. Meher Chand Khanna is writing into us and wants to invest really in the IT and the power packs, wants to look at some fairly valued stocks. So, Kunal, I'll come to you for that one. First, maybe you can take up IT and then power later.
Yeah, so I think IT is something which looks attractive. I would say that look at a mix of large caps and mid caps across the IT stocks. I think it's a good time to dabble into this space because of the way many of these stocks have shown recovery. There's almost been like a 10% plus broader recovery for the Nifty IT index from a zone of 26,000 on the IT index towards 30,000 plus where we're trading right now. I would suggest a mix of large caps and mid caps. You can probably look at something like Infosys, TCS on the large cap front. They still look very attractive. HCLTech could also be the third stock which you can keep on radar, specifically if the stock goes into a mild bit of a correction further. And then from the mid cap names, I think the two stocks charts which have been quite dominant and very strong are the likes of Persistent as well as Coforge.
All right, and anything in the power sector?
Not too much. I think the only stock which I would probably believe could be very attractive from the power equipment space would be G Vernova. I think that's another stock which has been looking very strong, has had a fabulous run over the last few years. And the best part is that the recent chart indicates that the stock has gone through a 10 to 15% correction, it's come back towards 4,000, 4,400 kind of a zone. So price-wise looks very attractive at the current juncture. But most of the other traditional stocks like Tata Power, NTPC, etc., these stocks are still struggling to find any kind of a momentum.
All right, Mr. Chokkalingam, if we could come to you on this one as well. Any stocks that you would pick, particularly in the IT and the power sector for this viewer?
Large IT stocks, the growth story is over, wealth creation is over, but still there could be a tactical opportunity in stock like Infosys because they have beaten down a lot. And more than that, Infosys is integrating AI tools with the IT services they provide to many clients. Even this morning we saw a couple of developments in that space. So therefore, I would suggest Infosys. On power sector, the story has already played out. A lot of stocks have already risen a lot. Still, one wants to, look at the power sector. I would suggest something like a Tata Power, and indirectly on Coal India, stock is beaten down. Now, I think I may be wrong, but I think it's a right time to start looking at seriously Coal India because solar power they are, installing a lot of capacities. And yesterday they got the allotment of iron ore mine. They are also getting into gold gasification projects and non-coal mineral. They are quite active now. So all this will play out in the medium to long term, and it's an indirect play on power sector.
All right, so these are investment ideas in different sectors. But this next question is coming in from Shrikant, and Scient is his query on entry price is 2409, quantity is 300. I think it's a short-term take, Kunal. He wants to know what should be done, whether he should be adding more. But then the buy price is very high, 2409.
Yeah, the buy price is significantly high. In fact, 2409 is apparently closer to the life highs for Scient, and the stock has more than halved, I think, from those levels. I think it's come back towards 840, 850, the last I'd seen for Scient. So it looks to be a stock which has gone through a major correction, and the timing has been a bit off for you. I would suggest that to try and recuperate that, I think it's a better strategy to now start to look at averaging out the stock so that you can bring your cost prices, say around 1200 to 1300 range. That would probably give you a lot more buffer in terms of when the cycle turnarounds for Scient, where the stock could go back into a turnaround mode. You'll have to be a little bit more patient. Stocks which correct by more than 40, 50%, they generally consolidate for another few quarters and then starts the scope of recovery for these names. But in that phase of consolidation, if you can average out and bring your cost price lower, it's a better strategy. So That will be my take for Cyient.
Right. Another question that we are picking up from is from P. Siva Ramakrishnan. Now, the stock that he's talking about is HDFC Bank. He's holding about 120 shares of that. And his entry price, of course, appears to be quite high. He's bought it at 921 rupees. Mr. Chokalingam, he wants to hold the stock for about 2 years. So he's asking if he should hold or should he average?
Oh, I think it doesn't make sense to give a sell call at this price on HDFC Bank. Yes, it has going through a lot of problems on the growth front, but it is in price. That's my strong view. And the valuation multiple on the market has crashed like anything. The biggest plus point is that the industry tailwinds are very strong. Industry is growing at 17-18%, which is at a record high level in the last 15 years. I am sure HDFC Bank at least, indirectly should benefit from this industry tailwind, and it should pick up the growth momentum. But of course, in the short term, it may not reward you. Certainly beyond 1 year, I still have a lot of confidence that the stock should start, rewarding the shareholders. So therefore, I would give a buy call for medium to long term.
Okay, we are also joined by a live viewer. This is Mohit. Mohit, hi, good morning. You're calling from?
Ludhiana, good morning.
Hi, good morning. You can ask your question.
I got 500 stocks of restaurant brand Asia, Burger King, at price of 106 a piece.
Okay.
I can hold for the next 1 year.
All right. Chokalingam, sir?
So I'm sorry, I have not studied this stock recent times, so I am not able to give any view.
Kunal, would you like to give a take?
Yeah, I think it's a good price where you've entered, because it looks like the stock seems to be coming back into its own. And after almost like a 1.5 year of a downtrend below the 100 levels, the stock has found its mojo back again. And thanks to the results, which I think was delivered a few days back, and the reaction post that, I would be bullish on Restaurants Brands Asia at the current levels. But my only concern over here is that there could be a possibility that the stock may come back into a mild correction before the next trend starts off for the stock. So I would suggest that since your average price so far is about 100 levels, try to bring it down to sub 100. Let the stock come back towards 80, 85 kind of a zone. That could be a very good point where you may consider averaging out, so that you can bring your cost price lower to maybe say 92, 95 kind of a zone. And that will be a very good strategy for you to hold on, because the next phase of the rally, whenever it starts off, say in the next couple of months or so, that should take the stock back towards 100, 105 plus levels.
All right, so average your cost at 80 to 85, and then maybe you can stay put after that. Well, time to take a short pause on the queries answers session. But up next, an exclusive roundup of week's key developments from Maharashtra in our Maharashtra 360.
Welcome back. You're watching ET Now, and this is Buy Now, Sell Now, and we are taking your questions live, so you can scan that QR code that will be flashing. But for now, let's pick up a query that we've got from Hyderabad, and in fact, this is a question that's coming in from Rayudu over there. The stock that he wants us to focus on is KPI Green Energy. The quantity he's holding at this point in time is 1,000. What we are also understanding is that the entry price is at 420 rupees. So he wants to know that whether he should hold KPI Green Energy or what is the target price of it in the future. So Kunal, you want to take this one first?
So I think it's a tough chart, frankly, because from 2025, the stock retested, I think, a zone of around 350 levels, approximately 320 to be precise, moved up towards 550 mark in mid of 2025. And then subsequently, the stock has fallen down to 320, 350 levels back again. So it's a stock which has shown those green signs in between, but then I think has not been able to really sustain those kind of a breakout move. So it's a tough chart to try and understand, but it's been a very volatile or a high beta stock per se. It's just that the good part is that the stock finds a good support or demand at this 300 to 350 zone, and the stock has currently tapped back into a very similar kind of a demand zone. So which means we can expect a bounce for the stock going forward. I would suggest just to hold on to the stock price and revisit the stock if it comes closer to this 500 plus levels, whether you want to book or not.
Okay. Next question is coming in. Okay, we have a live viewer on the phone line. This is Priyanka from Jaipur. Priyanka, hi, good morning. How are you?
Hi, I'm fine.
Okay, you can ask your question.
See, this ACC shares are purchased at 2,600 rupees 2 years back. I wanted to know the price is very low at the moment. How much time it will take to come back to my purchase price?
All right, 2600, Chokalingam sir, that's the buy price. And how much more you think the wait is going to be for?
It may be even 2 years, but it is worth waiting. It trades at only around 14 P on a trailing basis. Cement industry is going through little pressure on the overall margin. Some of the players, the growth momentum has come down in the industry. That is one major reason. But it is a good stock at current valuation. One has to, wait for at least 2 years, 2 to even 3 years to get that kind of return. But it is worth holding.
All right, let's move on. That's a take on ACC coming in, but then more WhatsApp questions. This is Mr. Sunil Kumar's question from Visakhapatnam, and the stock is Anantraj. Entry price is 650. I think it's a short-term take that they want to know because, Kunal, they want to understand if it is a time to hold for a few more months or can an exit be initiated?
I would suggest to hold on to the stock. I'm not sure what exact time frame you're looking at, but I'm assuming that even if it's, say, for the next 1 to 3 months, I would look at, say, closer to 700 as a potential target for Anantraj, 675 to 700 broadly as a target range. But I would also suggest that if possible, then look at the stock as more of a long-term play, because the rally the stock had shown from 2020 lows, when it was 2-digit towards moving almost towards the 900, 950 mark for Anantraj in 2024, has been a spectacular rally. The stock has gone through a correction post that, but I would sense that long-term wise, the stock would look fairly strong. And for that, you need to have a time frame of at least 3 to 5 years. So if you're okay holding for that, then it's a different ballgame altogether. Short-term wise, I would suggest keep a target rate in the range of 675 to 700.
All right. The next one that's coming in from is Prajapati Narsingh. The stock that he wants us to answer a query on is TMPV. The quantity he's holding is about 100 shares, and he entered the stock at 344 rupees. So, Mr. Chokalingam, what's your view on this one?
One can hold. If any recovery happens at 10-15%, one can exit. I am more bullish on CV business of Tata Motor rather than passenger vehicles, because CV business is more on a domestic play in terms of CV as well as in terms of its subsidiary, which is into lending business. Whereas PV, it's a majorly global play. Even the investment it has made in the IT technology is a global play. So I am more bullish on domestic demand theme, which favors Tata Motors CV. So I prefer Tata Motors CV. So at best, I would give only hold call on passenger vehicle.
Tata Motors CV is the preference. Next question is from Sandeep Anand. He's from Punjab. There are two stocks, HG Infra, bought at 712, and the next one is PNC Infra, bought at 296. He has not given us the time frame, but Kunal, let's take a medium-term view on both of these counters. Let's start with HG Infra, 712.
See, both the charts are still into a downtrend. Long-term wise, I think they're still making a pattern of lower highs and lower lows. For example, for PNC Infra, the stock made a high of around 550 in 2024. The recent low for the stock was around 170, had come back towards 250 levels and now correcting back again on the lower side. I would suggest that try and take this as an advantage wherever the stock goes into any kind of a rally towards 250, 270 mark as a point where you may consider to exit the stock and then come back to other frontline sectors, other performing sectors which we've been highlighting earlier.
All right, let's take another question right now. This one is coming to us from Greater Noida, and the stock that he wants us to look at is Adani Ports. The quantity is 720 and the entry price is 1,300 rupees. Mr. Chokalingam, he wants to know whether he should hold for 1 year or should he exit after booking profits?
One can hold, in fact, beyond 1 year also. Very interestingly, that the port business is going to be a perennially growth story in India. If India has to grow at 6 to 7%, even if exports of goods have some problem, the import of goods is constantly growing in this country. So both import as well as export of goods will favor port business like Adani. So therefore, I am quite optimistic for the long term. So I would say that one can buy for a 1 to 3 year time frame.
Okay, so that's a take on Adani Ports. Let's move on. And the next question is from Sonal Mathur. And it's on ICICI Bank. And Sonal has bought this at 1300 and wants to buy more. Kunal, assuming it's a medium-term outlook, current levels, would you initiate a buy or you would want want some little more time to hold?
No, I think you can continue to hold on to the stock and even look to buy the current levels. And it's a good strategy to buy a strong stock. You can say probably a leader stock in the entire private sector banking space on rallies. My assumption is that, of course, you're looking at this as trying to build your portfolio around, using ICICI Bank and then probably trying to take advantage in dips with other private sector banking names as well as the PSU banking majors. I would sense that. But I think it's a good strategy to try and average out ICICI Bank further also at the current levels, because multiple reasons, the stock establishing itself as one of the more dominant and the prominent ones with respect to peers on the private sector banking stocks in terms of leadership, quality. The stock is trading above the long-term moving averages, which makes the trend a lot more sustainable for ICICI Bank in the near to medium term. And the fact that the stock has consistently been making a pattern of high highs and high lows on the weekly as well as on the monthly chart, specifically after the drubbing the stock had received from the 2024 highs, I think makes it a case that the stock could see a further up move going forward. So long-term wise, I would suggest that continue to hold on and look to even average at current levels.
Okay, so the next talk, the next query rather is coming in from Hyderabad, and it's Jeevan Reddy joining us. So the question that he wants to know is, there are two stocks, in fact. One is Grasim and the other LIC. Grasim, his entry price was 3,145. He's holding about 100 shares of that. And the other one is LIC. Quantity is 500. Entry price 395. But he's only looking at a very short-term view. So maybe, Mr. Chokalingam, you can look at Grasim and then we'll come to Kunal for LIC.
Grasim is unlikely to give any significant return. I think it has already played out, trading at a very reasonable valuation. So I would sell Grasim in case it recovers even another 3 to 5% from the current level.
Anything you would recommend in this pack?
Pardon?
Anything you'd recommend in this pack if he were to sell Grasim?
It's a diversified company. So, I mean, difficult to find another diversified company on a comparable basis, but I can suggest a stock like, Bharti Airtel, which has corrected, and the telecom sector has a solid growth prospect. So I would prefer Bharti Airtel to Grasim.
Okay. Kunal, LIC, that stock's been in quite a bit of focus right now, and his entry price was 395, holding about 500. Wants a short-term view. What would you suggest?
Well, I would recommend to hold on to the stock. I think with this OFS also, the stock is down 10% because of that. I think 390 is a good price where the stock could probably find a bottom. The recent low for the stock has been, of course, on the much lower side, but then I would suggest that 390, 395 could be a good pivot point for LIC. I would suggest to hold on to the stock, and if possible, try and use this correction as a good point where you can look to average and bring your cost price further lower.
Right, so you can average this further. This question is on IOC. This is Satya from Kerala, and entry price is 130. He's been holding IOC for more than a year and wants to shift to something like a Suzlon or Vedanta. Kunal, would you recommend?
Well, I think Vedanta could be a good bet. I'm not sure of Suzlon because of the beta nature of the stock price. Vedanta, of course, now with the special situation out for the stock, could now become a good pure play, metal, counter. And I think in that sense, I would be bullish on the metal stocks going forward. So I think Vedanta could be something which I would prefer out of the lot.
All right. So the next question is coming in from George. He's writing to us from Chennai. The stock that he wants to talk about is Texmaco Rail and Engineering Limited. Quantity is 1,600. The price that he entered at was 149. Wants to know whether he should hold or exit. So, Mr. Chokalingam, what's your view on that one?
One can hold. Going through a little difficulty in maintaining growth momentum, but I am sure the railway segment of the business will come back to growth mode from next fiscal onwards. So one stock also corrected meaningfully. So one can hold, and if any decline happens, one can even buy the stock.
Okay, next question is coming from George. He's from Chennai, Tex Macro Rail. And okay, let's take Ritika's question. She's from Ahmedabad. The stock is LTM and the entry price is 4600. What is the future for this stock, short term as well as long term? Kunal, let's take a short term view. LTM price is 4600.
So I think it's almost at the current market price. The buy price is closer to the current market price for LTM, and I would sense that it's a good time where you can continue to hold on. I would believe, and I think I've been saying this over the last few weeks, that the IT stocks are on the verge of a revival. There could be a better scope for these stocks going forward. I would suggest that keep a target in the range of 5,000, 5,200 if you're looking at this, say, as another 1 to 3 month kind of a time frame. But if you have a slightly longer term time frame and if you're looking to try and buy these stocks at a point to try and build your portfolio on the IT names, I think staying invested in L&T, Infotech Mindtree is also a good strategy. The only thing is you'll have to remember that these stocks have gone through a major negative wave over the last 2 years or so. So there could be a possibility that those sudden bouts of negativity would keep on coming into these stocks. So long-term wise, very attractive. Short-term wise, 5,000, 5,200 is where you can keep a target range.
Well, all right. And now we hope we've been able to answer your questions, Mr. Chokalingam as well as Kunal. Thank you very much, both of you, for joining us. Well, we slip into a very short break here on Buy Now, Sell Now. On the other side, we will be bringing you more managements as the Q1 focus continues.
Welcome back, and we are talking to managements now on the quarterly results, and the focus is on Muthoot Microfin. We are with Sadaf Saeed, he's the CEO of Muthoot Microfin. Sadaf, hi, good morning and welcome to the show. Let's talk about the AUM first. That has grown nearly 18%, but disbursements have declined sequentially. Was this seasonal, or are you consciously sacrificing growth for portfolio quality?
Good morning, Kavita. Thank you for having me here. So, as you rightly said, the AUM has increased, but if you look at year-on-year number, disbursement have also increased. So, year-on-year AUM has increased around 18%, and disbursement usually in microfinance business in first quarter are low. But if you compare to our previous year's first quarter, it's a 50% jump on the disbursement. So last year we disbursed around 1,775 crore. This year we have disbursed 2,644 crore. So it's a significant jump. And it's a good momentum that we have carried in the first quarter of the financial year. And we are seeing a positive trend in terms of demand as well as the asset quality. The asset quality has significantly improved. We have seen collection improve. Our overall collection is around 98% and 97.97 to be precise. And our X-bucket collection is 99.9, and as a result, our GNPAs have also reduced by 19 basis points. And that gives us a lot of confidence to go into the financial year and disperse more. And that's why we have changed our guidance also from earlier 15% AUM growth to now 20% AUM growth. And of course, as a result, our profits will also improve, and we are looking at a revised ROA of around 3.3%. So the quarter has been really good for us.
Hi, Sadaf. This is Nupur joining in now. How much further downside do you really see in borrowing costs given the changing interest rate cycle? And how much transmission into NIM should investors expect over the next 2 to 3 quarters?
Thanks, Nupur. I think this is a very, very important question in terms of our cost of fund. It is coming down consistently. It has come down from 11.02% to around 10.13%. And if you look at quarter on quarter also, it's a 14 basis point reduction from 10.27% to 10.13%. Our incremental cost of fund is around 9.8%. It has also come down around 10 basis point between the 2 quarters. I think in the coming financial year or in the current financial year, we should be in the single digit in terms of cost of fund, which will definitely help us expand our NIM. We are currently at 12% net interest margin. By the end of the year, we are likely to be around 12.5% net interest margin. Quarter on quarter, there is an improvement. If you look at for the full financial year, last year we were at 11.9% NIM. We are at around 12% NIM. So there is a 10 basis point already improvement. If you look at year on year, we were at 11.5% NIM. We are at 12%. So that's a 50 bips improvement. Definitely in the coming quarters, we will improve our net interest margin. Our cost of fund is coming down. We are in a favorable situation because there is a good amount of liquidity. We are carrying around 5,000 crore worth of sanction in hand. We have 1,300 crores of liquidity on the balance sheet, and we have a huge demand in terms of loans. So definitely we will be able to grow well. And at the same time, the ability to negotiate with the lenders is also better. So our cost of fund is consistently coming down. In the quarter beginning, we had a rating upgrade. Our rating has been upgraded to AA minus. So definitely that will help us to negotiate better and get better cost of funds. So I think definitely there's a 25 to 30 bips reduction possibility in our cost of fund.
All right, PPOP has remained strong despite elevated operating investments. What is the medium-term cost-to-income target here?
So right now we are at around 53% cost to income. Our long-term goal is around 45%, but I think in the medium term we will be sub 50 by end of financial year. So we will be around 49% cost to income. And it is driven by both increase in disbursement, more operating efficiency. If you look at our branch, our AUM per branch was 7 crores at the beginning of the last financial year, but in the current financial year, we have already reached at 8.6 crores. So that is really helping us to improve operating efficiency, and our operating cost is coming down. It has come down from the last year 6.4 to 6.3%. We anticipate that this will further go down. So definitely this will help us to improve our cost to income ratio, and we'll be sub 50 by the end of the financial year.
Right. So how sustainable really is the current ROA trajectory of above 2%? And what would be the normalized ROA once the portfolio mix changes?
So we are actually guiding towards 3.3% of ROA, and we feel that we can consistently deliver around 3.5 to 4% ROA in the coming year. For FY30, we have guided 5% ROA, and our effort is to move towards that direction. And the strategy that we have laid out at the beginning of the financial year, which is getting executed now. So we have diversified our portfolio. Earlier, we were entirely JLG loans. So now our mix is around 76% JLG and 24% non-JLG loans. And the portfolio that we have generated in the last quarter in terms of individual loan over the last 18 months, actually, it's really performing well. We have 3,200 crores of AUM in individual loan. There is a 30 plus of 0.02%. There is no 60 plus at all. And that portfolio is really performing well. That is also helping us to digitize our collection. 40% of our overall collection is digital now. And simultaneously, we have also started gold loan business. So we have disbursed around 350 crores in gold. For the first quarter, it was around a lesser amount because we just started. But now we are had a run rate of 100 crores per month that we are disbursing. And both the assets put together are contributing well in terms of our expansion of AUM as also improving in profitability. So definitely we will continue to grow and we will contribute to the AUM as well as to ROA.
Non-JLG products are growing rapidly. What share of incremental disbursements do you expect to come from MSME, gold loan and LAP over the next 2 years?
Yeah, so our target is to be at around 70 and 30 kind of a mix where 70% would be JLG and 30% would be non-JLG. We had initially target around 75.25. We are already at 76.24. So by end of the year, we are definitely gonna overachieve our earlier target. So our disbursement mix incrementally would be more towards gold and individual loan. Definitely, our JLG business will continue to sustain. So right now, the disbursements are 50-50. So 1,000 crore disbursement in a month, 500 crore is going to JLG, and around 500 crore is going to individual and gold put together. And that trend will continue definitely as we accumulate. But because the base of the non-JLG is smaller, the percentage growth there would be much larger.
All right. Now, could diversification actually dilute margins, or will lower credit costs more than offset the yield moderation?
Yeah, that's a very good question. I think, Nupur, the products that we have chosen are very carefully identified. So we have studied the pattern in which the customer kind of borrows, and we have done a study of propensity to take next loan. And we have seen that the first loan that the customer takes after microfinance loan is a gold loan, and then subsequently a business loan, secured or unsecured. And all of these products we are offering. So our idea is to maximize the wallet share of the customer. So overall yield per household will remain intact. Our yields are also expanding. In the current quarter, it was slightly flat, but in the coming quarters, it's definitely gonna expand. Our overall yield on the lending is blended rate, if you look at, is 23.5%. So that will continue. And definitely, with more retention of the customer, I think we will be able to bring more operating efficiencies, because the cost of new customer acquisition is slightly higher, and also credit cost is also higher. So it helps us to retain our customer with multiple products in terms of building and operating efficiency, and also reducing credit costs. So you are right in a sense that these two parts will definitely offset any sort of compromise on the yield, while our yield is anyway improving.
All right. With that, thank you so much, Uday, for being on the show and answering all the questions for us. Thank you. And with that, it's a wrap on this edition of Buy Now, Sell Now also. But we will take a short break, and post that we'll get you market set noon. Stay tuned. Goodbye.